All right. Good afternoon, traders. If it's afternoon where you are, maybe morning or some other time throughout the day. I'm in the East Coast of the United States, so just past the lunch hour. Thanks for joining us. My name is Jason Pfaff. We're going to be talking momentum and trends, trading with Nadex. So we'll take a look at some indicators, some ways to determine if momentum is in a market, and talk about some ideas around trading that. Thanks for joining me. Some of you may have been a part of our webinar late last week where we talked trading correlations with Forex. If you didn't happen to be able to attend that, I really strongly encourage you to go out to the Nadex YouTube channel, favorite it. Tons of great educational content out there. As you know, always be checking the webinar page on the website as well. Fantastic live resources. But again, if you miss one, check out the YouTube channel. The videos are always out there later on, and just tons of great resources. So thanks for joining us today. Again, trading trends and momentum with spreads and binary options. Again, my name is Jason. I'm a independent analyst and proud Nadex educator, and love doing webinars like this. Here to help. Feel free to fill up the chat box with questions, other questions you may be having about Nadex, and if I can't get you an answer, I'm happy to help you find one. Love and certainly passionate about helping and supporting the individual trader. Love the Nadex platform, and so anything I can do to help you. Certainly today we're talking momentum and trends and trade ideas around that, but just let me know. Thanks in advance for your thoughts, ideas, questions, and feedback. Feel free, as you have questions throughout the presentation, just put them in the chat box, put them in the question box, and I'll be checking periodically as we go. So I've been with Nadex on some level for over a year now, doing webinars like this. I write articles for Market News. I've had a rather robust set of experiences across markets and with forecasting different things, and oil or forex rates, etc. Certainly trading has always been a part of that. And one of my favorite things that I like to trade on or like to find in markets is the trend or momentum. Seems simple, and when you find it, it's a pretty good setup for a potential trade. However, determining when that momentum is present and which direction it's headed is sometimes harder than it may seem like. So sometimes more art to it than science, sometimes more science to it than art, but we'll talk about that and some of the ideas and approaches I have. Before we go any further, just want to talk through the risk disclaimer real quick. Certainly trading on Nadex, trading in general, in any capacity involves financial risk, may not be appropriate for all investors. My purpose today is purely informational and educational, certainly no solicitation of any form on my part, certainly not an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Your trading decisions are your own. Please keep in mind as we talk about past trades or look at past history, that past history is in no way, shape, or form indicative of future results. All right, so let's get to it. Our objectives today, certainly want to talk about the basics of momentum, what it is, the basic process of trading it. I'll go over 3 popular indicators for determining the level or direction of momentum in a market, and then we'll take a look at some examples of momentum with the accompanying indicators with some Nadex charts. And again, these are past historical strikes in certain markets, etc. So the process is pretty straightforward for determining if momentum is in a market. First, the easiest thing to do is pick a market or a series of markets you want to look at, right? So one of the things I would encourage you, especially as you're initially thinking about, either being, more of a focused momentum trader, or at least putting on some trades with the idea of following trends or momentum, you certainly want to be in markets that you understand. You may be, seeing a very flat market, but it may be a commodity and it may be coming up on a certain season or, a certain event that other traders might have access and understanding to that you would not, and it may be ready to take off in either direction. Or vice versa, it may be running strong in a certain direction. You may think, hey, I found some momentum, and only to find out that, again, there's a certain event or a change in the season or in the seasonality. Again, that happens a lot in commodities. If you've traded other commodities, maybe agricultural, you come into different harvest seasons or shipping seasons or different seasonal events. So make sure you're trading markets that you are A, that you understand, B, that you're curious about. A lot of times folks think of momentum in the context of the stock indices, especially over the last few years. Those have been not just filled with momentum, but, over a broad span of time, they've headed higher. So, if stock indices is your play, you like trading those, you've got lots of information at your fingertips about those, you can stick with being a momentum trader in that area. Or, momentum at some point is going to exist in any market, but just make sure you're in a market you understand. Second step in the process is identify a trend. You want to see it first, trade what you see. Then step 3 is confirm with indicators. And then the fourth step is just understand the basics ingredients of your trade as you put that trade on and follow through with it. In many cases, this process is not that unlike other trades that you'll put on. The key here is really the second and third. You want to find a trend that you can see with your eye on your chart system du jour, and you want to confirm that with indicators. Maybe you have some fundamental data that you can use to confirm that as well. The other thing that's important, most important part of any trade is not only when you put it on, but when you take it off. Discovering when momentum starts is just as important as knowing when it stops. So one of the harder things about momentum trading, and this is really critical, is the psychology of it. Folks are just almost, paranoid, that might be too strong a word, about, in their words, right? Just think of a, just a general archetype of a trader that nobody likes to leave a position, quote unquote, early and quote unquote leave money on the table. But as a momentum trader, or will know that momentum can enter a market just as fast as it can leave a market. So sometimes momentum will carry different assets or markets into a zone. If you trade RSI, we talk about being overbought or oversold, which can spark a reversal. And if there's been volatility and sharp momentum one way, sometimes that reversal can be very sharp and correct very quickly. So it's not necessarily about leaving. Again, psychologically, we're wired to think this way. I don't want to leave it too early and leave money on the table. On the other hand, you certainly want to be out of a momentum, in my opinion, out of a momentum trade before that momentum is drained from the market and you are vulnerable to possibly a correction or a reversal. So make sure you're aware of that, A, and then B, as we talk about some trades and stuff, just really be keen to understanding, again, good exit points for momentum-based trades. And I'll just give you a tip here, preview of later discussion. You need to be comfortable. Trading momentum is not about perfect entries and exits. Okay, if that, I would consider more, the term would be a market timer, or there's other systems that get to perfect entries and perfect exits, and really trying to get precise. That is not what we're talking about today. We're talking about getting in when you see evidence of a trend, which means it's already started. You're going to have missed out on some potential upside in that sense because the trend's already visible. You just have to be comfortable with that. And then 2, we want to make sure we're at least I do, want to make sure I'm out of a trade. Again, it's not just about leaving before the momentum stops. It's about making sure I'm not vulnerable to a correction or a sharp reversal, which would, take out some of the upside I may have made on the momentum trade to begin with. So it's psychologically different than other ways of trading. If you're a precise, this is the entry point, this is the exit point, and you've got a system to determine that, and you like timing that in a very specific way, that's not where we're going with a more momentum-based mindset. So the definition at a very basic level of momentum, it's just a rate of acceleration or change of a market's price and or volume. So what you're looking for is markets and times when we see a market moving in a direction and we believe that market will continue to accelerate in that direction. That's what you're looking for. Again, the key here is you already need to have some evidence of it to put on a momentum-based trade. A trader opening positions based on momentum, obviously that position will continue to move in that direction. Again, this is not about finding a reversal. This is about, hey, this thing is heading topside and I want to piggyback. I think it's going to continue that move. Number 3, your tools. We'll talk about this the bulk of the presentation. I'll just introduce you to a couple. There really are a variety of tools, including your own fundamental understanding. As an experienced or as you gain experience trader, don't ever discount your own insight. But there's a variety of tools, certain indicators, oscillators, trend lines to help you discover where and when momentum is happening. And then 4, the benefits of trading momentum. So traders typically who like momentum, you like opening and closing positions in shorter time frames. You like trading when you've got confirmation of a direction, knowing you may, bleed a little upside of the entry or the exit. You still like the fact that you see a swift moving market, you can get in and get out based on the trend that's already evident in the market. All right, so let's take a look at some indicators to confirm momentum. All right, the first we're going to look at is affectionately known as MACD, the moving average convergence divergence. We'll keep MACD. I keep it simple all the time, but I'll keep it really simple and light here. If you want some more information on some of these technical indicators than we'll cover today, again, I did a webinar a few weeks ago for Nadex, 5 key technical indicators every trader should know. That's out on the YouTube channel. Again, I strongly encourage you to favorite the YouTube channel, watch it. There's other technical indicator webinars and videos out there that Nadex does. It's not all specific to Nadex either. It's just good information and content for traders. And then you can also, if you haven't already, go to www.nadex.com/demo. Register for a free and permanent demo account. It takes 2 minutes. They stack it with some virtual currency, virtual money there so that you can trade live markets, but in a simulated fashion with respect to your money. So you can watch a technical trading video, get some concepts here around momentum, and then I encourage you to experiment and try some different things in your demo account if you haven't already. So we'll talk about MACD real quick. I'll just kind of explain what it means from a momentum perspective. Also talk about on balance volume, fantastic indicator, and then RSI or relative strength index. If you have a question about a different indicator that I'm not covering here, again, I just wanted to touch 3 real quick ones. Please put it in the chat box or question box. I'd be happy to talk it through. These are 3 of many, many, many different indicators you can use. I just thought I'd talk about these 3 to kind of introduce some concepts. All right, so MACD. So MACD is a trend following or momentum indicator, and it's going to show you the relationship between 2 different moving averages. It can be more complicated. You can make MACD really complicated. I really encourage you not to. I'm a simple guy from Oklahoma. Let's keep it simple. MACD tracks moving averages. As those moving averages widen, and the shorter term moving average starts moving up faster than the longer term moving average, you have an indication that this is a market with upside momentum. The rate of change, remember we talked about what momentum is, the acceleration is moving faster than the longer term trend. So in the case of MACD, it's a 12-day moving average and a 26-day moving average. So when the 12-day crosses over the 26 and starts moving up and they start to widen, meaning the 12 days moving up faster, you have an indication that there's momentum in the market. So the signals with respect to MACD, and I kind of already talked about this, but there's a crossover and a market's moving in a certain direction. Once you have a crossover, that's a signal. We have a trend afoot. And then as you see the lines widen and the histogram gets longer because there's more widening between the moving averages, that is an indication of strong momentum. So here, and again, we'll just take a quick look at this, talk about it quickly. If you got more MACD questions, feel free to put them in the boxes. But you can see the two moving averages. You've got the signal line is the yellow, the MACD line is the black. So the signal line is the shorter term, the yellow line is the shorter term moving average. And as you can see, during periods of change in the asset, the signal line is quicker to turn, right? Because it's calculating less periods, it's more weighted to the recent term price of the asset. Then as those two lines widen in whatever direction they're heading in, the histogram, which in this case is pink, as those bars get wider, that's measuring the distance between the two moving averages. Okay, so if you look towards the middle, just to the right side of the middle at the February time frame there where it's going up and down, this is crude oil, by the way, and that starts heading down. Sharp move down. If you look at our bars at the top, oil's heading down in February. Signal line heads down. Again, that's your shorter term moving average. Your MACD line heads down, but it's slower to change because it's taking into consideration more past periods. So as those two lines widen, that's showing you a stronger near-term trend. And the pink bars are measuring the distance between the two lines. There's distance because the signal line is moving that much faster than the MACD line. So essentially what you're looking for with MACD is longer bars in your histogram, wider divergence between your moving average lines. That will tell you you have stronger momentum in a market. RSI, relative strength. This is a very simple, straightforward indicator. It just compares and measures the recent gains and the recent losses over whatever time period you specify in the price movements of whatever market you're trading. So it just shows you, I mean, the title really does tell you what this does, the relative strength. So given assets and markets are always in flux, they're always moving, RSI is going to tell you how strong that recent move was. One thing important too to point out about RSI, if you're new to it, and this goes through technical indicators in general, with RSI, it's relative, right? So it's measuring the strength of that market or strength of that move within that market. So, what may be a sharp move in the gold market from a price perspective would not be a sharp move for a tech stock, right? So the RSI for gold is going to be different than the RSI for a tech stock. It's relative. However, there's levels on an RSI that you want to understand as well. We're not going to go into detail on the levels because that really gets into where you're starting to try and time reversals, et cetera. But over a 70 or an 80 is considered overbought. Below a 20 or a 30 is considered oversold and ripe for a reversal. So RSI shows you the strength of a move. Again, it's just a momentum oscillator. There's just one line, measures the speed and the rate of acceleration and the change of price movements. As something moves above 50 and towards 70 or 80, that's considered a strong move. Above 80 is a really strong move, but you start to get into overbought and potential for a turnaround. The reverse is true on the downside. Below 50, headed towards 20 or 30, that's a strong downside move. But once you get below 20, you're really on watch for a potential reversal as the market or asset is considered oversold. So in this case, the RSI is kind of the area chart, the pink area chart in the background. And so as you can see, as the asset heads up, it's giving you different readings. Again, the reverse is true as it heads down. The RSI axis is on the right side of this chart. This is euro dollar. Prices are on the left. The RSI is on the right. You can see generally during sideways moves, it starts to collect around 50 or between maybe 40 and 60. And well, really, there's on the left side, that's just that one move above 60 when you can see the euro really gets to the high point on the chart, starts to head up towards 60. However, we got to a reversal after 60. But if you follow that trend, this is a 4-hour chart. So if you start with like the 10th, he's got the dates down at the bottom, and move to about the 14th where it reverses, you can see you've got a nice uptrend in your RSI, right? You go from if you start on the 9th, you go from almost like a 30 up to a 60. You have almost a double in the RSI. And during that same time, you've got a nice uptrend in price. So the price is steadily increasing, and RSI is giving you an indication that this move is getting stronger and stronger. But again, the key takeaway on RSI is above 50 is positive, below 50 is negative. You want to see it heading to 70 or 80 on the upside, below 70 or 80. Below 20 or 30 on the downside. The other thing to do too is just, we mentioned the demo account earlier from Nadex. You just want to take a long view with different asset classes. As a trader, I trade lots of different markets, right? And again, there's been different levels of momentum and volatility in different markets, And so you'll see the other thing on RSI that's nice to do too is to look at different time frames, where even on a weekly or a monthly chart, it'll give you a sense of historical values for a certain asset class. And so as you learn about different markets, I really encourage you as a trader to take some time outside of normal trading hours. And if you're trading gold, for instance, and you're day trading gold or natural gas or oil or something, and you're looking at 15-minute charts and refreshing those, you may just be in a really tight range and you start to lose perspective. Take time at the end of the day, zoom out, step back, look at a daily or a weekly, and just get some perspective. Here's where this asset's been. Here's where it could be. We're going to take a look at natural gas later. Natural gas is a great example lately, in my opinion, of a market that was pretty relatively flat for a while, that's seen a strong move higher, and it's been kind of a fun market to continue to research on and look at different charts and different time horizons to really understand here's where the level of volatility is and here's where it could be headed. All right, on balance volume. Another great momentum indicator, looking at a little different aspect than price. That's why I wanted to include it. Again, there's a lot of a lot of momentum indicators out there. Just wanted to touch on a couple today to give you some concepts and some context. But I like OBV because it gives you a tool outside of just looking at price action. MACD, RSI, those are just looking at the rate of change in price. That's important, but there's some other things that really can drive momentum outside of price. One of those is volume. Absolutely believe understanding of volume into a market is critical. If you are trading indices, for instance, you really want to understand how daily volume changes, the impact of increasing volume. Let's say you're seeing increasing volume in an uptrend. That really means something different than decreasing volume and seeing an uptrend in price. Those are two different market conditions, in my opinion. And so an understanding of volume and how that's feeding the momentum you're seeing is really important. Basically, all OBV does is measure buying and selling pressure. It's a cumulative indicator. So it'll add volume on up days, subtract it on down days. It's really simple. But as we'll see, it's pretty effective in gauging where the level of momentum is in a market. It does help us with divergences as well. If OBV is moving up and the price has been moving lower, this could signal a reversal. Opposite is obviously true. But if they're both moving in tandem, specifically if price and OBV are moving up, it's a great tool to confirm what you're seeing. If you're seeing price move up and OBV is moving up, that is a nice trend confirmation. If you're seeing price move up, and we'll look at an example of this, and OBV moving down, in my opinion, that is a rather hollow potential trend that could be setting up for a reversal pretty soon. So here's a good example. So this is Netflix, one of my personal favorites here. I always love talking about equities and markets that I personally enjoy. Netflix. So here's a good example of, this is a volatile tech stock. We can't trade it specifically on Nadex, but I thought it'd be, an example that we could all relate to. So in this case, this is going back to June. Very simple, but you can see price starts to take off, on balance volume starts to take off at the same time, right? And so what OBV is, remember back to what we just covered, it's just a cumulative, up days volume is positive, it subtracts down days volume. And so again, what OBV is not, let's go back to, again, another concept we talked about earlier. We're not looking for something that's going to tell us, here's the perfect entry point or here's the perfect exit point. We're looking at something that's going to confirm a trend or momentum. And if I see a stock lift off on the 21st, and if I see OBV or a market lift off on the 21st, and if I see OBV lifting off on the 21st or 22nd, close to that, and their trend lines are fairly similar, there's a nice trend confirmation. That's saying there's more up volume. As the price goes up, positive volume is continuing to come into this market. Okay, so if we step back, and again, this really is a great example. If you imagine right now, this Netflix chart is just a stock index. If you trade stock indexes on Nadex, positive volume is really important, right? Like, that's a great way to get some momentum going into a market. If on days that the market is higher, volume is higher, that's telling you there's more bulls, there's more positive sentiment, there's more folks coming in to bid that market. Flip side is also true, obviously. If you only have relatively few bids on up days, but on down days, people are just piling in selling, well, that's pretty concerning, right? Like, that's negative momentum. So OBV is a great way to confirm a trend. In this case, what this chart is telling you is, as the price of this asset goes up, more and more buyers than sellers, more upside volume than downside volume is coming into this market. Great trend confirmation. So let's look at another example. This is probably my favorite current chart right now. This is from not that long ago. So we remember from our disclaimer, past history is no indication of future performance. But this is over the last, couple of 6, 8 weeks, let's say, of the S&P 500 stock index. So I want to take a minute here and kind of lay this out because I think this is a great, great, great example of momentum or not momentum and how that can affect the market. So if we go back to the beginning of September, we saw the S&P heading back up. And for those of you that trade actively in stock indices, or maybe you're just aware of the markets, we've been flirting with all-time highs before the last 2 weeks in the S&P for months now. It's been record-setting and a lot of positive vibes through the market. And through September, up until the first week of October, we continued to move up. And for they've called it the longest bull run in history. For a market that's moved up for a long time, for many folks, this felt a lot like the good times are here to stay. And while everybody knows markets can't go up forever, just given the context of where this market has been, there's almost a level of what I would call complacency, one man's opinion, but just a sense of, okay, we're headed back up. So you can see the price chart here at the top. It's moving up. Trend is moving up. No question about that. That's a 4 or 5 week uptrend move. It's not massive by any stretch, but it's a nice almost 100 points on the S&P. OBV, however, charted along that same time period, is flat to down, and you can see all the way across it's flat, and starting really mid-month it trended down. If you look at RSI, similar move. It was flat and then down. And if you're a savvy trader, well, that down move does correlate with, in the middle of the month, we did have a reversal again off of an approach of all-time highs. But the key here is it never recovered. If this is a market with momentum, with energy, it would have recovered off of that mid-month reversal potentially and just, pushed higher. And if you're watching your technical indicators, that didn't happen. You saw it stall from a momentum indicator perspective. Again, if I'm looking at OBV, I'm looking at RSI. They started to move down off mid-month, even though the index starts moving back up. Right from the middle of the month, we come down to about the 25th, and then we start to get a few candles higher. And then, again, if you trade the indexes, you kind of know what started around the 3rd of October. We've certainly had some pretty volatile sessions with some downside exposure and acceleration, and then you can see the momentum indicators and how sharply they move in the other direction. So this is an example really of, I guess it's, on the downside the last 2 weeks, it's downward momentum. But in the middle, this is a case where I think there's probably a lot of momentum traders in the market who are coming off the down move there at the back half of August. On the left there, you can see the price action is down coming in. Bottom a little bit there around 28, 28.60. And we start moving back up. Folks thought, hey, here we go. And you never really saw the momentum indicators flip. And if you're not really doing your due diligence, you may have been potentially thinking, hey, momentum's coming back, but you don't really have any confirmation of it in the technicals. All right, I'm going to pause here for a few questions. Thanks to everybody for your questions and comments. All right. Okay, good question on MACD. Are MACD crosses considered more reliable when on the same side of the zero line as the trend? The answer would be Generally, yes. That's a bit subjective. That's my opinion. Again, sometimes there's a little more art than science, but yes, I would say it would be widely considered. Um, I don't know if reliable is the right word. I would say stronger. I guess that's getting to your great question here. So the exact question is: are MACD crosses considered more reliable when on the same side of the zero line as a trend? I think generally the answer is yes. I would consider that a stronger, sharper pivot point, if you will. Reliability to me gets to accuracy. I'm not sure if I would consider it more accurate, but I would consider the potential for more energy in that move. One thing to keep in mind, and I try to mention this throughout, anytime we're talking technical indicators, there's no technical indicator it's 100%, right? So always keep that in mind. That's why I always talk about technical indicators in, batches of 2 or 3 or 4. You want to be checking several, and I'll also like to use technical indicators like OBV, on balance volume, in conjunction with MACD or RSI, things that function only as a derivative of price and price action and price movement. Obviously, price action, price movement is the most important thing, but I'd like to have a couple of different indicators that work off something different to give confirmation, whether it's momentum or correlations or, just anything I'm trading. Any system. So yes, the answer to your question is I would definitely consider that a stronger confirmation of a change in direction or of a direction. Great question about MACD. I have a question here. Is it possible to open, let's see, more than one contract asset page simultaneously without taking a position? Not to my knowledge. I'm not aware. So if I do become aware, here in the next few minutes, I'll let you know. Or you can always email me and I can follow up after checking with the fine folks at Nadex. But I'm not sure that's technically possible on the platform. I think it's one, you'd have to go one at a time. But I need to think about that one. That's a great question, because obviously you're trying to scan multiple markets at a time, looking for quick momentum moves. There may be some, additionally to that, there may be some other products or scanners in the marketplace that would help with that. But specific to the Nadex platform, I'm not sure if you can log in and capture multiple contracts at once. Great question, though. To my knowledge, I don't know that you can. Good question here. Can you overlay symbols on one Nadex chart? That's another, not to my knowledge. I do that on TradingView. I run overlays constantly all day, and I'll use TradingView for that. Again, someone may have a hack or a way to do that on the Nadex platform, which I absolutely love. No platform is perfect, but I'm not aware of a way to do overlays. But I will use TradingView for my overlays. We had a great webinar the other day on correlations, and I was using TradingView to show how different assets correlate, etc. That video's out on, I mentioned earlier, the YouTube channel. But for overlays, I looked at TradingView. I'm sure there's other packages that you can find too. Okay, I do have, let's see, so just go back to an earlier question about different contracts. So the answer is yes, you can load up 2 separate order tickets and send those separately. So apparently that is possible. Glad we're checking. So appreciate that question. Go back here. Dennis, that was your question. So that is possible. I think the folks at Nadex support would be able to help if you're unable to locate that, but it is possible. You can do 2 separate tickets. I was not aware of that. So good question, a good answer. Happy we could help.
What the fuck, Jason?
Yeah, you'd send them separately, but you wouldn't be able to send them simultaneously. All right. Let me check for a few more questions here. Thanks, everybody, for the engagement and questions, thoughts. All right. So good segue there, a little talk of the Nadex platform. So a couple of things about the Nadex platform I think that does for me personally, set up nicely for a momentum trader. One is a range of time horizons that are defined for you as part of your options trade. So you can trade momentum on 5-minute time horizons, 15-minute time horizons, or 20-minute time horizons with Nadex hourly. A whole range of time horizons that you can trade against. I think that variety is up to over a course of a week is really helpful to define that up front as a trader. You can buy or sell. Obviously, momentum can cut in either direction, so that's very helpful. If you're familiar with Nadex, your risk is limited. You won't ever lose more than you paid for the trade. And then also, this is really critical. A lot of times on the protection without a stop loss, if you're trading a spread or something, a lot of times you have momentum in a market, volatility might be up. And there's times where that up volatility does allow for pretty wide swings. So let's say you're trading, a daily or a weekly contract. You sense momentum's coming in the market. You get some confirmation. You put a trade on with a Nadex spread, for instance. You buy yourself some time for that market to come back around without having to use a stop loss. You're not going to lose money below the floor of your spread, and you allow yourself some time for that momentum to finally kick over and kick in and head up. So without having to use a stop loss, getting stopped out of your trade. One thing is, if we weren't on the Nadex platform, one thing I would tell folks looking at putting on momentum trades is you really, really, really want to be aggressive. This is my opinion again. This is how I trade. You want to be aggressive. I want to be aggressive with my stops because, again, if volatility's up and you're looking for a momentum, that market can swing back and forth. And if you've got your stops up, you are protecting your downside, but you're also giving yourself a very little margin for error before you're out of the trade. With a Nadex spread, you're never going to lose more once you hit the floor, and it does buy you some time for that market to come back around, and it can move back up again and start to capture that momentum, whereas you might not have been wrong. You might have been a little bit early, which in a lot of markets is wrong, but if you've got time with a spread, even if you were a bit early, that market comes back around and shoots topside. You haven't been stopped out. You've got the time for that momentum to finally kick in. And we've all, if you've traded for any length of time, been in that situation where we've been a little bit early on a trade. You knew it was going to happen. You knew it was going to happen. You knew it was going to happen. And then by the time you're stopped out or you close, right after that, it's still in your watch list, or you peek at it and it shoots topside, and you're thinking of all, the holiday presents for your wife you could have bought, or whatever your trading goal was. Maybe that was just my trading goal. But again, with the Nadex spread, it really allows you some flexibility and some latitude when you're trading momentum, because you're never going to lose more than the floor, regardless of what happens to the broader market, and it does buy some time for it to come back around.
I thought I already.
All right, so this is natural gas. Let's look at the trade here. This is on the Nadex platform. So we've got a momentum indicator, RSI, MACD. Our indicators are going. Again, this is natural gas. This is over a pretty short time horizon, really, 30, 40 minutes. Just want to give you a sense here of the indicators. They all turn at the same time. They flatten at the same time. So gas is heading up there in the shaded part of the box. The momentum is building. If you had put on a trade to the left of that box when you start to see the
My
indicators turn
Tom
up.
18.
It's certainly one opportunity. But then again, you can see, and this is where if you don't have a momentum mindset as you move to the right side of the trade, a trader who isn't using these indicators or maybe thinking differently about their style or strategy of trading, again, you get to that moment where you're deciding, okay, am I leaving money on the table? Is it a good time to exit? What do I do in this situation? Whereas to me, again, a lot of what we talk about with momentum trading is it's just mindset. You're just looking to piggyback. You're looking to find and piggyback on a trend. And the instant you think that trend may be slowing down or pausing, you want out. You'd be able to see that in your indicators, while price actually holds, on the right side here, this is a small but important point, your indicators start to collapse, telling you that the momentum is drained out of the market. So if you're a price action trader in this situation, and again, I trade price action, I mean, there's nothing against that, but if you're, again, taking a momentum-oriented mindset, you're going to ride this thing up, potentially, hopefully, and you're going to close as soon as you hit that peak, and you're going to move on looking for the next market. Whereas if you're trading price action, you're thinking, hey, maybe you're getting back to your support and your resistance. Hey, we got some support here. Maybe we hold. Maybe we pivot. When's the inventory release? Nothing wrong with that. But if you're a momentum trader, you're thinking, hey, time is money. A lot of other markets out there on Nadex I want to check out, and I'm going to close. I see momentum collapsing. I'm holding price, but momentum is collapsing. I think this run is done. I'll take profits potentially and move on and evaluate other trading opportunities. Okay, so I wanted to show a good example here of, you're holding price, but your momentum is broken, and you can see price holds. It doesn't really do anything to increase or improve your position as a trader. Regardless of when you got in this trade, nothing beyond the 1610 mark is really happening to improve your position. And you can see all of our momentum indicators are collapsing, deflating, giving further indication that the move is over. If you're a momentum trader at that point, you'd exit and move on to the next market. The other thing to think about in terms of, and this is specific to Nadex, momentum trading is where you are in relation to the strike. So this is key. It's not only good if you're trading as a momentum trader, but it's just something that probably all traders would want to realize is you're either thinking about opening a position or you are managing a position. So in this scenario, we're trading the guppy for any FX traders out there, pound yen. Probably my favorite FX pair to trade. Historically, a little more volatile than most and at times overlooked, but a fantastic pair. So you're trading the guppy, and you're within range of the strike. This is certainly, again, as I said, historically a volatile pair. However, if we look at our momentum indicators here, it's provided by the Nadex platform. There's not really much happening, right? Like, we're around zero on our momentum indicator. Our RSI is right down the middle. MACD is holding right around zero. If you're looking at that, let's say the 146.20 strike, right? Like, and again, obviously a lot's going to depend. I don't have the time horizon, the time to expiration on here, but regardless of what you think about that price, a lot of folks would think in terms of price action. And I think a lot of traders might think here in terms of, is it going, they think in terms of direction, right? Is it going up or down? But again, when we're trying to trade momentum, again, this is a simple but finer point. You really want to be in the mindset of, does this have the juice to get to where I need it to get? Well, the answer right now is no. And to me, that's the primary question before you even get to direction. it may head up. It just may not head up enough to get to, if you're looking at that 146.20 strike, or maybe you're wanting to short it down to 146. Again, if this is on a tighter time horizon, obviously pound yen over the course of an hour could move in either direction. But if you're trading a 20-minute binary or whatever, regardless of direction, as a momentum trader, you need to see evidence of a trend before you put on a trade. And in this case, this is my opinion. I might look for another market with a little more evidence of momentum in it. Because while, this is like right in between the 146 and the 146.20 strikes. A lot of folks might try and think in terms of direction. I just don't even know if it's got enough juice to get to either one. In this case, a little different. It's a good example of momentum. This is Aussie Dollar, another favorite pair of mine. So you can see strong indicators, right? And again, this is another case. You're right at a strike here, right? You're 71. That's a pretty important strike too. It's a nice big round number. So you're 71 on your strike on Aussie Dollar. This is an hourly chart. You can see strong confirmation downside again, right? We'd be selling this contract potentially. If we're trading momentum, this would be a sell. You got strong confirmation from your indicators. And price has been heading down. That's why you get strong confirmation from your indicators. And again, you're right at your strike. Certainly could break either way, right? Anything could happen here. But as a momentum trader, this is certainly, a position I would consider selling, just given, if somebody presented me with this setup, right? So in this case, if you contrast that with the previous example, this is a very much stronger momentum play if you look into the downside. All right, I'm going to take a quick look here at our chat box / question box. Flip through here. Thank you guys for your patience. All right. Okay, so a question here, how would you hedge? It's an interesting question. Hedge a momentum position in Nadex. I'm not sure if we're referring to you've already got a momentum position on Nadex, or if you've got you might be referring to if you've got a position elsewhere. How would you use Nadex to hedge that position? I could answer both, I think, at the same time. So Nadex is a great platform to hedge. You could theoretically hedge positions on Nadex or hedge positions you might have on another platform or brokerage or just some other situation. So if I'm understanding your question correctly, if you've got a position where you're expecting a directional move in one direction, let's keep it pretty straightforward here, a stock index, and you want to hedge against that position falling apart, my words, but you could buy a strike on Nadex for what I would consider an out of the money, below the market, or below the market spread, and sell that, and so that if the market dropped, you would have a strike that you would sell that would be inversely cheaper to the fact that its distance from the market, right? So it was a certain distance from the market that allowed it to give you some coverage. So you would pay whatever that contract cost, sell that below the market, and then if the market dropped to that level, you'd have some downside protection to your position. I think that might be getting at what you're asking there in terms of hedging a position on Nadex. It's an option platform that if you've got a position elsewhere, you would find a price and a strike that worked for you to allow you to afford some coverage if something major impactful happened to your other position. You could theoretically do that within multiple positions on the Nadex platform, or again, if you had a position elsewhere on a different platform. So I think another good question here about closing a position if no momentum. Absolutely. One of the great things about Nadex is, if you think about a binary option, we also often talk about expiration, but you can close any position you have at any point, provided there's a bid for it before it expires, right? So if the momentum you anticipate does not materialize, yes, you'd absolutely have the opportunity to sell that contract back. Again, just as always, I asterisk that with, there need to be a buyer on the other side, but, yeah, you could absolutely close that position if the momentum you're looking for does not materialize. Asking, are spreads or binaries best for hedging? I think this is an opinion here, so let me be clear. I always think in terms of binaries. So for me, a relevant hedging strategy that I would use is, as I was explaining earlier, you'd find something that had a relatively good distance away from the market to make it affordable. I think of it as like this is a bit of a wild metaphor, but if you think about it as major medical insurance is your high deductible, right? So if I've got a position that moves with the market that I may be able to take a certain level of loss, right? But if something major happened to that position, I'd be out considerable dollars. I'd want to hedge that somehow, and I can use a binary option that's, again, a good distance from the market, meaning it would be more affordable. It would cost less. That would then have a larger payoff, right? You think of cost and potential payoff as related, right? So, if I bought a binary for $10, right? Well, the upside of that is 90, right? And so, if I've got a position that if it were to really, really fall apart on me, I'd be out a considerable amount of money. I could scoop up potentially, again, I want to be clear, we're talking hypotheticals here, but let's say a series of $10 binaries that would then pay off at a certain level that if my other position fell through, I'd be out considerable money, and so I could use upside from binaries if the market fell to that level to pay off the downside I incurred on another position. However, if my other position continues to, be profitable and ultimately is profitable, well, then obviously I'd be out what I spent on the binaries, but you need to make sure you're managing your money in a way that, you didn't spend more on the binaries than your other position was worth, right? Like simple principle of hedging. So I think in terms of binaries, great question about hedging. One of the fantastic uses for the Nadex platform. But that's typically the examples and the thought processes I use are with binaries. I think in general you can use any instrument to hedge. Somebody can think about a creative strategy to do that, but me personally as a trader, I prefer binaries. Yeah, so just a follow-up question here. Yeah, just, a pretty good distance out of the money on the binary would make it affordable enough to pay for your downside exposure elsewhere. My personal favorite time frame to expiration for momentum. Great, great question. You know, this is another, it's kind of personal. Everybody's different. Gail Mercer, another Nadex educator, does fabulous. I mean, fabulous with a capital F. Fabulous work on like 5 and 20 minute, by really short term binaries. So check her stuff out on YouTube. Even if you don't plan on trading that short, to get some perspective on it, because it's helpful to know. If you do trade that short, you got to check out Gail if you don't already. Great webinars on the Nadex YouTube channel. I typically think in a day or two, up to a week. So let me give you some perspective on that. I trade a lot in energy. I work a lot in energy, think a lot on energy. I've got market news articles out there on energy, and to me, energy markets work in kind of a few days to a week-long cycle. You open the week with some speculation on news stories from the weekend. You've got your midweek inventory reports. If you're talking oil, you've got your end of the week, rig count report, right? And so as a trader on Nadex, again, we're talking hedging earlier too, so if you've got a decent position in oil, right, and let's say, momentum's heading up and the news from the weekend was really bullish and the inventory report's bullish, and I would want to ride that. Again, to me, just the way my brain works, an energy market works, a couple of days. You can scalp oil. You can do oil in much shorter time frames. Let me be clear. I'm just talking about my personal preference. But then you can also hedge at each point, with an option. You may have a great run going, but you want to hedge it because you are coming into inventory, and a bearish inventory report could kill your position. You think it's going to be bullish, but you want a little protection. Binary options and spreads are great for that. Also, natural gas, again, energy markets is kind of set up for a few days to a week long move. They typically, that train leaves the station and they get going in a direction. But that's one of the great things about Nadex and the educators. Check out Gail. She'll do very short time frames. So to answer your question directly, I like a couple of days to a week. I like a storyline to run through a market, and I like to watch that build and work its way through a week. But, that's why we trade, man. There's no right answer. Great, 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 great questions. All right, just looking here through the chat box. Man, we are up on an hour. All right, that is the time we've allotted. Let me flip to this. If you have other questions or comments, our time there went fast. Email me, please. Jason@thedutchbook.com. You email me today. I promise I'll have an answer to you by the time you eat dinner. Would love to follow up, continue the conversation. I've got other webinars coming up on Nadex. Again, check the webinar page. I've got past webinars just talking about oil. I've got one for oil trading. We just did a correlation one in Forex, Bitcoin, you name it, out there on the Nadex YouTube channel. Check those out. Appreciate you guys sticking around and talking through that. Love talking about momentum. Happy to follow up the conversation via email. Thanks for everything, and happy trading. Good luck rest of the day. Take care.